Good afternoon. It is our pleasure to welcome Warwick Brady, CEO of Stobart Group, and Lewis Girdwood, CFO of Stobart Group, for our interview today. Warwick, could you give us an overview of the Stobart Group, please?
Of course, and yeah, it's a pleasure to be here. So the Stobart Group, we're listed on the main exchange as a FTSE business. We are a business that's focused on two divisions. One is the aviation business, which we have a very valuable airport, London Southend Airport, which has been the fastest growing airport over the last 3 years, growing at sort of 40% per year. We also got an aviation services business, which has been growing fast as well. We also have an energy business, which is a biomass business that turns effectively recycled wood into energy. It's a high cash generation business, and it's a very valuable business in a high growth industry. So they're our core focus: aviation, specifically around our London Southend Airport, the last airport in London, and our energy business. And then we've got a lot of non-strategic assets, which we're divesting of, and we have recently divested of our rail and civils business, as it's been an underperforming, loss-making business. So that's the core of the group.
Lewis, we are in exceptional times with this global pandemic, so I'm wondering, how is COVID-19 impacting your business and how are you addressing it?
Yeah, it is quite exceptional times, as you say. I think what we have is two businesses that are impacted in very different ways. We've got an energy business that relies on the availability of waste wood, and that it collects from the construction industry, processes it into biomass fuel, and then supplies it into the biomass plants. The supply of waste wood was constrained following the lockdown. However, Stobart Energy has since benefited from a restart in the construction work. And that's leading to increased availability of waste wood in the industry. Now, because of that, Stobart Energy is now able to start to plan to meet all of its obligations and its contracts to supply biomass fuel through to the end of the year. And that is what we're working with our plant partners on achieving. So that's coming through, and we're pleased with the way that that's showing. In terms of the impact on of COVID on the aviation industry, I mean, that is pretty well documented on a regular basis. However, we believe that the world will find ways to manage or cure the COVID virus, and that aviation will recover with people continuing to want to travel. That is something that we firmly believe in. London Southend Airport is therefore very, very well placed for creating value in the medium term. And we see that from three different factors. So the first is our ability to establish an enhanced passenger experience for post-COVID-19. The opportunity of a cost-efficient airport for the operation of low-cost carriers, and the airport's location serving London. This is the most populated city in Europe and one of the most visited places in the world, and that's why we see real value in London Southend Airport as we come back through COVID.
And Warwick, can you describe the strategy for your businesses?
Sure, yeah. So let's just start off on the aviation business. The aviation business is centered around effectively the London Southend Airport as the key value driver for shareholders. Now, as Lewis stated, how do airports grow over the next sort of 2 or 3 years back to kind of 2019 levels? IATA have said, look, the traffic will return in sort of 23, 24. We're optimistic there will be a rebound. Travel is an essential part of industry and an essential part of people going on holiday. So, and we've got our valuable asset at London. The strategy is to continue to grow. And we do that through, we're very well placed. We're connected to London, Liverpool Street. There's sort of 6 trains an hour, so great connectivity to the airport. It's 50 minutes on the train, as close as Stansted and Luton and Gatwick. So we're a real London airport in terms of our proximity to London. We've got the lowest cost of capital of any airport in London, so we can offer the lowest costs for airlines that want to effectively, in these very difficult times where costs are really important, when you've got some uncertainty on revenue. So you've got the lowest cost airport in London. It's well connected to, and London was pre-COVID the largest travel market in the world and the fastest growing in Europe. And then, of course, we've got the best airport experience. So there's sort of 3 factors that are going to make our airport really quite attractive for airlines in these most difficult times. I mean, it is an unprecedented time in aviation. And the question is, how do we make sure we protect that value for shareholders? So on the aviation, the real core focus is making our airports work with a focus on London Southend. On our energy, and just to say, that we've really seen some fantastic growth for the last 3 years. And we believe, look, people are always going to go on holiday in the UK. We're a leisure-focused airport, point to point in Europe. So we think that's going to be a real advantage in terms of the bounce back to aviation. On the energy side, I mean, we've got a really core business that's a 30 to 40 million EBITDA business when it's in full operation. It's in that sort of sector which is sort of goes with the government policy of restricting landfill. So obviously recycled wood can be come into our processing sites, and then we've got these long-term contracts that feed in these plants that then obviously turn them into electricity. And that's a real growth business. We've got high barriers to entry. It's highly cash generative. And so the idea is to simply continue to grow that business over the next sort of 18 to 24 months before we monetize it. And then the idea is we'll cash, and we'll invest it into continue to grow the aviation business. Airports are very valuable assets in the longer term. You've seen airport multiples well in excess of 20 times EBITDA, and we need to get our airport beyond sort of 7 million passengers. We need to get it into the Luton type area of sort of 18 to 20 million passengers, which will require capital. So broadly, the strategy, effectively focus on aviation and aviation services around London Southend Airport. Really develop the energy business. Again, both high growth businesses and high cash generative businesses. Of course, COVID's had a massive impact on both our businesses, and our job is to effectively, in the near term strategy, is to protect the value for shareholders, because these assets will come back over time. And then, of course, what we've said to our shareholders and the market is we're divesting of every non-strategic asset. So that includes our rail and civils business, which we said we'd divest of by the end of the financial year. We've done that already. We've obviously got to divest of our airline, and we've also got to divest of our non-strategic infrastructure assets, which we're doing in the next 2 to 3 years.
And you were mentioning your shareholders, and obviously the markets have been pretty unforgiving, and we think the markets are not necessarily reflecting the value of the company. So what is your message to shareholders, Warwick?
So there's two things. One is we've obviously just done a capital raise. We issued capital at 40p a share, and we're currently at 25, 26p a share. So, disappointing for shareholders at the moment, but we've got to make sure that we protect the value for the long term. We're very confident that travel will rebound. People are always going to travel, and the energy business is going to be highly valuable because it's such a high cash generative business. So I think for shareholders, it's important that we've protecting the business in the short term. We've got a lot of liquidity now, so we've sort of got well over a sort of 24-month runway to develop and protect the business, whilst obviously the world kind of returns to normal. But and again on the value, we can talk about the valuations shortly, but we believe our assets are highly valuable. When you look at a sum of the parts business, we're highly undervalued.
Lewis, do you want to add something to Warwick's comments?
Yeah, I think the liquidity raise, what it's done is it's given us a stabilization of the business to allow us to come through COVID, and we're looking at a position whereby when we did the raise, we were looking at liquidity that took us to December 21, and I think that's the key message is we don't know how long this is going to be, but we've raised the liquidity with a robust base management plan and reasonable worst case plan that will take us through to December 21. Now, clearly, that is all determined by how COVID pans out, but I think it's the liquidity is there. I think that the robustness of the plans and the strategy that's in place is there, and the sum of the parts, clearly, we're in a position whereby we've had these businesses. Previously, last year on the energy business, we had a management incentive plan for the energy team. That valued the business at circa £250 million. And we've also, just before COVID, we were looking at a transaction on a part ownership of the airport that was valuing on the medium term for the airport as 700 to 800 million. So that's really key when you're looking at a share price of 26 pence now. The real value is just not being recognised in the share price currently.
Thanks a lot. This concludes our interview with Warwick Brady and Lewis Girdwood from Stobart Group. Thank you very much.
Thank you.